We apologize for that break in transmission and urge you to remain with us as we have so much more for you as the show progresses. A cohesive relationship between fintechs and commercial banks that benefit Africans at scale was the subject of Disruptors Club panel at the Africa Finance Summit in Casablanca, Morocco. The 4 panel members spoke about challenges faced in working relationships between fintechs and banks. Let's have a look.
I'm Regional Director and Group Head of Public Affairs at Wave, and I'm leading effort to expand financial inclusion through innovative digital technology designed to serve underserved and unbanked people. About Wave. Wave Mobile Money is a mobile money platform, fast growing, launched first in Senegal in 2018, now operating in 9 countries. Our biggest market is Senegal, but Côte d'Ivoire is almost the same size now than Senegal. We have another big market that is Gambia. I talked about Gambia this morning, how it's easy to expand mobile money there. We are fast growing in Burkina Faso and Mali and other countries. The last one is Cameroon. We are just launching.
Afis is a technology company. It's a fintech of infrastructure, offering a payment infrastructure for whoever needs to pay and whoever needs to be paid on different rails, cards, account to account, and soon the emerging new rails, offering also a whole set of services in digital banking. Today we have customers in 18 countries, from Canada to Australia. It's a team of 1,600 talents across the world.
Cash Plus, we are a fintech, a Moroccan fintech, created 20 years ago. We have a hybrid model, so with a network of points of sales, 5,000 points of sales across Morocco, 12 million customers who visit our stores each year, a mobile money application with a wallet used by 2 million customers.
We at Yabex, we started about 6 years back, 5.5, 6 years back, with a big problem to solve for. Fundamentally, we believe the whole MSME and consumer space in Africa is undisrupted, right? And so that was a problem, and we knew it was a very difficult problem to solve. Just in terms of where we've reached, currently we have access to profiles and scores of about 150 million Africans, which we work with our partners, which are banks, financial services institutions, microfinance, etc., who underwrite the credit risk. And we work and partner collaboratively with them to offer credit products.
About what is not working. A lot. We can share a lot, but I will be very brief about what is not working. When you are a fintech partnering with banks, what is not working sometimes is the time to market, where you have to wait a long time to be able to launch innovative solution when you depend on the bank approval, because it's your product. But because you don't have the bank license for some product, I was giving the example of the Visa virtual card we just launched. It took us more than 4 years because first, you have to explain your product to your bank partner, who will have the responsibility to explain that to the central bank. But before that, they have to understand, but also to accept the competition. When they have their own, for example, a product competing with yours, and they will have to understand and to accept. I think that we'll talk about it, but you will need to find the right profit sharing with them, the right share of responsibilities while they are officially bearing all the responsibilities. Yes, so it's the time to market that is very frustrating when you are a fintech partnering with banks.
If we have a look at the half that is full, when we see all the valuation of the fintechs today, it seems like something is working because we do not create value when things doesn't work. And I agree with Cory when she says that it is a matter of inertia of the banks that are most probably established, where they have the weight of the regulations. When she's saying that the banks are taking the responsibility, the risk. So all this, because they are organizations that are complex, it is sometimes it's the antagonism of the fintech that needs to be very agile, etc. But what doesn't work, in my opinion, is that when we see the whole ecosystem, it is not normalized. And I think this is where we need maybe some efforts from regulations, from the incumbents, from the fintech, to sit and make sure that we don't need to rebuild everything from zero. This is really what would be lacking, that we can see in other parts of the world where there is this standardization that makes the fintechs able to go much faster. Standardization in the tech side, but standardization also on the regulatory side.
As a fintech, we see that we have a real problem of time to market when we partner with the banks. Why? Because first, there is a lack of trust at the beginning. Who are you? How do you operate? Have you done a security check before coming to us? And then we start to discuss. And when you start to discuss, it takes too much time because we are talking with operating guys, but then you have to talk with legal teams, and it will take 2 or 3 years. And we had the same experience as Wave. We started to issue virtual cards for international payments, and it was complicated. It didn't take as much as for Wave. Well, it takes us 2 years, but 2 years for fintech, it's too much time. And for example, instant transfers also. And we are in a regulatory business, so we have to cooperate also with the central bank. We have to explain to them why we want to do this. So trust, sometimes ego also. Sorry, but we have to say it. Why this fintech will do this and will compete with us? So this is the main, I think, issues that we have with partnerships with banks.
Fundamentally, our business is built on partnerships, so we're big on them. But we've seen the journey, right? And I think inherently, what I fundamentally believe is there is a belief in every bank you go to that we can do this ourselves. I mean, you can imagine being told you can't do this, right? And so there is this pride or belief that I can do this as well as this and this and this, right? But fundamentally, it takes time for banks and financial institutions to realize that they need to let go of some part of the business to more specialized companies who they can partner with rather than own things themselves. The realization of doing so it's a journey in itself, right? Point number 2, what we've seen, the bigger the organization is, the more time it takes for it to move. And we've had multiple discussions on why the larger bank would take more time than an agile and or a challenger bank. And I think fundamentally the heart of it is the bigger the bank, the more it is for them to lose, the more they are risk averse. So we've had fairly good success working with challenger banks who may not be the largest banks or largest. We work a lot with mobile money providers. We work with payment gateways. We work with the entire ecosystem. We've seen the thirst in somebody who's already not at the pole position to come up and partner. And he's okay to ask around saying, I want to reach there. And can there be a partnership that can help me get there? So those have been some of the realizations. Obviously, commercials, technicals, they're all part of the being, right? I mean, everybody wants the best deal for themselves, and some of the deals don't go well because everybody's trying to eat on to the largest share of the pie, which is technically not possible. So we've had a number of these discussions where we've sort of elaborated on the scope of work that each party takes up and the commercial value to that scope of work, right? And so some of these discussions haven't been easy, but I think part of that reason is because fundamentally everybody wants a larger pie of the money being made in the entire product that's being rolled out.